Good morning, traders. This is Michael coming to you from GameEdge on Friday, August 22nd. Thank you for joining us this morning. And if you've joined us anytime this week, we appreciate it. Make sure you go back and review any of our pre-market preps this week, as well as previous weeks, as well as our post-market recap, where we go over the price action for the day and how we used our tools to navigate the day and make profitable trades. As always, join us at gammaedge.us. Sign up for our weekly newsletter. You'll get that on the weekends. Go ahead and put your email in. Again, you'll be sent that. It's education content about our philosophies, our tools, and how we navigate the SPX option structure, as well as multiple other topics. And if you want to join us at our Discord, trading Discord, click the pricing button. You'll be taken there. Extensive room of traders with all levels of backgrounds, as well as helping traders get up to speed on our tools and how to use those to become profitable. And then look at our free courses here, GameEdge Fast Pass. That is our flagship educations course, as well as stock of options and unlocking the mental side of trading. So you can sign up for all those. Those are all free. All right, let's jump right into it. This morning, obviously, as always here, GameEdge, we start with our three pillars: sentiment, structure, and trend. Market trend model keeps us on the right side of the market. It's based on the tick index. Again, you can research that at your favorite investing website. But to get you orientated, the bolded white CT is our intraday instantaneous CT or cumulative tick, basically showing buying versus selling in the overall market of market participants. Again, we want to see this bolded white CT be above our shorter term moving averages. Again, these are just for momentum. And then our colored ribbon is our longer look back period of how market participants are transacting, buying versus selling. So again, this is how we would position our money in our longer period of the market. So again, we'd like to see this bolded CT cross above these shorter term moving averages and moving from the left to the upper right in a positive sloping fashion if there's more buying versus selling in the overall market. New highs versus new lows breadth indicator here, basically parity yesterday. So we'd like to see those new highs continue to start outpacing new lows, indicating that more stocks are being bought than sold if we're going to have price appreciation. And then you see these this pane right here. This is the cyan look. This is our filtered cumulative tick, plus 1,000, minus 1,000. Block orders. These are institutions or larger market participants. And if you scroll back, obviously you've seen it be below the zero line really for the past 4 to 5 days and into last week. So again, we want to see that start living above the zero line and pushing to the upside, indicating institutions are buying more than selling. But again, if you want to be on the right side of the market, this area right here is important to watch as institutions continue to sell throughout the days. Obviously, price continues to go sideways and down, but we want to see this push back up to the upside to indicate that institutions are stepping in and buying versus more than selling. This is basically the tick that includes all the regional exchanges as well as everything. So this is what we call kind of the kitchen sink. It can be a little bit more active, but it is a little bit more noisy. So we move over to what we call the tick RC, and this is the paid for play exchanges. Obviously, this is a little bit more filtered, and we like to look at this for our mechanical portfolio. This is a little bit more quality tick indication here. And again, if our mechanical portfolio is going to turn on, we want to see the bolded CT above the colored ribbon, which we do not have, so our mechanical portfolio is off. So again, end of day yesterday, we started turning back up a little bit, seeing some buying come into the overall market, but we want to see this continue to the upside. So within the overall colored ribbon, from our historical back testing, this can go either way. This can go to the upside. We can start a new trend moving to the upside, or we can start turning to the downside and emerge below the cyan, which would indicate we may be starting a further pullback in the overall market. So again, basically this is a pivot point that we'll continue to watch to see who's going to win the overall battle here. Moving on, the SPXA, this is our cruise ship. Again, larger institutions. The reason we look at the SPXA options markets, there are 15 million contracts here. And we believe we're the only service that separates the SPXA from the SPXP. Why do we do that? The SPXA is obviously larger institutional contracts. These contracts don't turn over as fast as the SPXP. You can see via the monthly expiries here. So these do exert a force on the overall market, but again, it doesn't exert a 0 DTE or as a weekly force. So that's why we like to watch these for institutions, see how they're positioned. The big boys and girls move the overall market with their pocketbooks and how they're speculating. So that's why we like to watch this. We're called dominated above and below spot price. You see the transitions. We've talked about that, slipping further away from these transitions here. So we'd like to see it at least get above the 64.45 and move to the upside if we want to see a price appreciation, but really no significant degradation in the overall complex at the moment. Again, in the money call dominated above and below spot price. So we'll continue to watch this day over day. All right, moving on to the SPX. Hold on one second. Okay, sorry about that. Let me go back. Oh my goodness. I was on the wrong browser. That's my fault. Okay, so let's go back. Let's start back over real quick. Sorry about that, everybody. I was like, wait a second. These dates are not correct. So here we go. Let's start back over. Obviously, market trend model still trending sideways. The breadth indicator, obviously new highs versus new lows, was flat yesterday. Same thing there. Tick indicator for our filtered cumulative tick was below 0. Institutions obviously continue to sell. No change there from the previous day, and we're within the overall colored ribbon there. So let's move on to the tick RC. The cumulative tick here obviously is within the overall colored ribbon, so we're still at a pivot point. Nothing's really changed there from the previous day. As you can see, 821 here, 820 here. So if we want to see the bulls or buyers emerge, we want to see it emerge above the colored ribbon and then move to the upside in a positive sloping fashion. You see this is continuing to move to the downside, and then we're sideways. At the end of the day yesterday, we did see some buying start to tick up and try to cross above these momentum averages. So again, we'll watch this today, see if it emerges. If it emerges to the downside, obviously we'd indicate that we're probably going to have a larger pullback. If we're indicate that we're emerging to the upside, then we could see some price appreciation. So we'll continue to watch that. All right, let's move on to the SPXA with the correct expiry. Call dominated above and below spot price. Noticing the transitions here, 64.45, 62.95. Again, we want to see spot price get above these transitions to have the opportunity to move up towards 6,500. We'll denote this red box right here is the in the money puts above us. Again, if we start to move up, these may be difficult to overcome. So we'll continue to watch this, but we're still call dominated via the institutions, but we have seen a little bit of erosion of the call speculation above us, exposing those in the money puts. So we'll continue to watch this. If this starts to continue to erode, then we'd be looking for a larger pullback within the overall market. All right, moving on the SPXP with the correct date. We are put dominated as we start today. You'll notice that the net delta is completely red, indicating that we are put dominated above and below spot price with out of the money put speculation here and in the money puts above us on the overall complex. Transitions here, 63.70, 64.05. Need to get above the 6,400 level at the very least for the bulls to have a chance to start moving up towards that 6,500 level. You'll notice the JPM end of the month, obviously September short strikes there. So we'll keep an eye on that. But again, starting from a put-dominated negative GEX overall structure heading into today via all expiries. All right, let's move on to the GEX ratio. We discussed this extensively yesterday on our pre-market prep. So scroll back. We were talking about the divergence and the negative slope as the SPX was going sideways. We said that would resolve one of two ways. The GEX ratio is a put-call ratio, or is a ratio of short-dated call gamma to put gamma, but we add obviously a time component, which is gamma to it. So it gives us an overall understanding of what's happening in the short duration of the speculation or exposure of the overall market. So we saw this negative. We talked about reaching a extreme point. Yesterday, we started the day at roughly around 0.1, or we were below 0.1, and we were talking about the 0.6, 0.58. Historically is an area where we could see a bounce point, which we saw back here previously in August. And then we got that move back to the upside here. And now we're trying to get above 1 and with a positive slope as SPX is moving down. So this is a positive divergence indicating that short dated put gamma is not entering the complex as much as the short dated call gamma. So we'll continue to watch this to see if we continue the positive slope to the upside. That would be out of the money call speculation coming in and overriding the in the money puts above us in the right hand plane. And really that gives us an idea of the urgency of the bulls for speculation to the upside. So that's why we continue to watch this day over day. So positive divergence heading into today, back towards the one level, almost the one level, which is parity. So we'll see which direction this is going to go. So again, this will resolve one of two ways. We'll see this GEX ratio start heading to the upside, indicating short-dated call speculation is coming into the complex, and will probably be met with price appreciation, or the SPX will continue to the downside, and we might see this GEX ratio start turning back down. So we'll continue to watch that day over day. Delta balance heading into next week, it's really kind of a mess. We may see a short-term bounce today, so get you orientated. The red is the left-hand plane below spot price. That's indicating out of the money put speculation or in the money calls. The right-hand plane is the green dotted line. That's our out of the money call speculation or in the money puts above us. You want to see this start to move above zero, indicating out of the money call speculation overriding in the money puts. And obviously you want to see the delta balance heading above zero. So we're seeing two of the three prongs heading back above zero, which is the in the money calls below us, out of the money put speculation starting to wane a little bit. So that drives the left-hand plane up, delta balance up, but we're still not seeing that right-hand plane out of the money call speculation come in. We have to start seeing this for price to start moving up. Closing puts or closing your out of the money puts, or as those are captured, out of the money becomes in the money, can only drive price so far. We need to see that out of the money call speculation start coming in, opening those positive deltas for our book getting longer, dealer book getting shorter, and they have to hedge to buy. So as of now, we're seeing a short-term bounce in that, but not necessarily enough to completely drive us higher. Again, so we'll continue to watch this. And into next week, we see the short-term bounce, and then we see it falling back down, indicating we could see weakness heading into the beginning of next week, and then possible bounce towards the end of next week. So we'll continue to watch that. All right, moving on to the SPXP net stat command. This is our high sensitivity levels for today. Again, this is what we call a locked horns look. We have in the money calls below us, in the money puts above us. So again, basically it's like a cart stuck between two walls, just pushing back and forth, one of them trying to win the battle. So then we move over to the integrals to see who has possibly the largest force to move price. Obviously 6,000 in the money calls is significantly below where spot price is, but we're still in the money calls below us. So again, this will continue to exert force supported. So then you move on to the next lines. Each line exerts its own force, but when we put it all together, then we have an idea of what the overall structure looks like. So net charm 6350, these out of the money puts below us will continue to be supportive as long as we're above that level throughout the day. Obviously time will continue to tick throughout the day, and if spot price starts to stagnate, again, these could exert a little bit larger force. Now if we start moving through these levels, obviously that changes the overall structure as we move through those. But again, out of the money puts, these will continue to be supportive as long as we're above that level and time continues to tick on today. Out of the money calls here, you see this is a little bit larger than the left hand plane, so again, it would be difficult for spot price to move up past this 64.35 unless we see the intraday volumetrics, large amount of volume trying to overtake those strikes. So then we go to our web app, we'd look at the net OI, and we'd see if there's enough intraday volumetrics to overcome each one of those hurdles. And that's how we use our overall kind of approach of our web app and our tools, understanding if we'll be able to overcome levels and moving along those moving along the structure up or down. So let's go to the SPX 0DT for today, and we'll talk about where we're at within the overall structure. So as of now, price, let's see where we're at pre-market. So we're at 63.85 pre-market. So basically we're right smack dab in the middle of the drunken sailor range, right in the middle of the transition areas. So again, this is basically a low exposure area what would be where we will be driven by the intraday volumetrics, intraday market participants speculation. So we could just chop back and forth within this overall transition. So how would we play this? Most likely we would wait and be patient and play a move out of the drunken sailor range with watching the vol am as well as the market trend model moving to the upside. We'd have to see the out of the money call speculation really start driving price higher. You see there's 10,000 total OI here. It is fairly balanced, so we're really not going to need a significant call or put OI volume to drive us higher, but that is going to continue to exert extreme force above us at 6,400. So we'll continue to watch that. And then to the downside, you see 63.75. OI there is 5,000. You see there's like 3,400 puts, 1,600 on the call OI. So again, we're going to see need to see a significant amount of force to drive us out of the money put speculation to drive us through these levels to the downside. 63.50 key level to the downside where we bounced multiple times yesterday. We had one of those V-shaped rallies 2 days ago that we talked about from that level. So again, that's going to be extreme level to watch to the downside. So 2 ways to play this today. Below drunken sailor range, we look for a short for a move down towards 63.50. Sorry about that. Above the drunken sailor range and transition, we'll move to a little bit more call dominated positive gamma. Obviously, we still have in the money puts above us. These are put dominated, so we're going to have to see a significant amount of out of the money call speculation come in to drive us up towards 64.30. Now, this is where moneyness matters. If we start driving price higher, these in the money puts will start becoming out of the money, right? So then these holders have to start making a decision whether they're going to monetize and close those or whether they're going to continue to hold those. And this is why we say, as always, moneyness matters about whether these contracts become in the money or out of the money and how they're exerting their force. And then once we start moving through these levels, what do market participants do once they start seeing their overall capital depreciate, as well as the intrinsic value as they continue to drive price either direction. So we'll be watching the intraday volume metrics to see which way price is, which way the speculators are moving price overall today. Yesterday, we posted multiple times, I think on X or previous days, when we see those centroids crossing what we call our chopstick pattern via our vol-m, it's really a consolidation day in your range bound. There's really no urgency from call speculators or put speculators, and that allows us to put on some great options trades to capitalize on the chance of not going above a level or not going below a level. And then we, as always, we manage our risk, but we do have great confidence in our tools of understanding whether we're going to have a range day or we might see a trend up or a trend down day with directionality. So again, that's how we'll play it today within the overall drunken sailor range, most likely choppy. A wider transition means more uncertainty from market participants. As you've seen the past couple of days, we had very narrow transitions, but we've widened out as we head into Friday. Negative net GEX, pretty decent size to start the day. So we'll have to have a significant amount of change to overcome that negative net GEX. So again, key levels 63.75, 63.50, 6,400, and then 64.30 or 35 to the upside. So sorry about that start. I was on the wrong browser, so make sure you're up to date with that. So let's move on to the SPXP. I'll go ahead and look at that as we head into the morning, and then I'll look at single stocks. So here's where we are. We're at 63.85 pre-market. This was our close yesterday. So I've drawn out the drunken sailor range as well as our 0DT transition levels. These are manual. And then our trading script is the full expiry at the moment, but we do have a 0DT trading script that you can overlay for Thinkorswim or TradingView. Those are automated in the Discord for our members. So easy just to download, copy and paste, and you'll have those levels on your chart if you wish. I preferably just like to do the all expiry for a larger look, 30,000 or 40,000 foot view, and then I just manually draw my 0DT levels. For me, it's just a preference. It's just a visual idea. You could put the 0DT levels on their script and then manually draw the full expiry. Really, it's a trader preference. So we're going to be opening smack in the middle of transitions as well as 0DT, or sorry, drunken sailor range. You see 6,400, 63.95, all expiry is going to be important. And then you see the 0DT transition levels. So for us, when we have that confluence of 0DT transition levels as well as all expiry, that becomes a extremely important level to the upside. So if we drive up towards that and fail, that may be an opportunity to short for a move back down towards the drunken sailor range. Again, within the drunken sailor range, very choppy. These will be butt in the seat, 0DT, short-term, smaller contract size trades. If we get below drunken sailor range, obviously be looking for a short. We'd be losing in trans here on all expiries as well as 0DT, more negative put dominated environment. So we'd look for a drive down towards 63.50. And I've just manually drawn this box in for me visually. We see COTMP here. Historically, where out of the money puts go in the money, this can be a monetization area. And then if you look back from a TA standpoint as well as a structure standpoint, that 63.50 to 40 is really your wet sponge to the downside. And then if we lose that level, then obviously there's going to be a significant change in structure and sentiment. and we'd be looking down towards 63.25 and 6,300. Not anticipating us to drive down that level today, again, unless we see some news. I know we have Powell speaking at 10 o'clock, and I think Trump is speaking at noon. So again, some noisy events on the horizon for today. But we have a structure. It has to be navigated, sans all the news and noise events. So we'll see how we navigate that structure for today. And then pre-market, here's a few other, obviously, Qs are above in trans. So that's a little bit positive development. IWM's above 0 gex. SPY's above in trans and 0 gex. So if we can hold those levels today, we have an opportunity to move to the upside. So we'll continue to watch those. So let's move on to some single stocks. Yesterday we had some really nice action around our levels. Tesla and a few other stocks were acting really well around our levels. So again, in trans 0 gex here on AMD 162.50. Key level to get above if you want to see upside appreciation. So we'll continue to watch that. Apple's above P-Trans, needs to hold that level for the bulls. Google above P-Trans, need to hold that level at 200. Meta below N-Trans, 0 gex and P-Trans, so that's a little bit more negative. NVIDIA already testing our P-Trans 0 gex levels this morning, so key levels to watch. If we're above those, I'd anticipate more price appreciation, or below, possibly a pullback down towards 170. And Tesla, so interesting on Tesla, just continue, I'll expand this on the 5-minute. We're just chopping between this 0 gex and P-Trans range. So that really gives you an idea of what level, from an option structure standpoint, you need to overcome. We had drove all the way back down to that COTMP and negative gex at 315. Then we bounced, and we're just chopping around. And you can see the respect. I know we oscillate above and below, but this is just price discovery, right, around these levels. But it's really cool to watch when you get a rejection here and then supportive type action around 0 gex, and then you're just chopping around those. So this can be a long point above P-Trans 322.50. You could look for a long there, or below 0 gex. Possibly you could look for a bounce, or if it really becomes negative and we start to see the market trend model head down, then we could look for a short below that 0 gex and N-Trans level as we get in a more negative gamma put dominated environment there. And then Amazon above P-Trans looks positive there already this morning. Robinhood chopping around 0 gex. Uber came right down to COTMP. Wow, wish I could make this up, but I can't. So again, out of the money puts become in the money. Most likely you see monetization. I mean, that was almost to the penny there on COTMP 93.22. Intel, I just had thrown that one up, is chopping around that P-Trans level. PLTR, we saw it drive all the way down to 154 yesterday, I think it was. That was a key area we were watching. And then now we're at N-Trans, negative gex, 0 gex at 155. So again, PLTR going to be a important level to stay above. And then obviously getting above P-Trans, we did in a more positive gamma call dominated environment for price appreciation. So, all right, a little bit longer slide. Sorry about the start, everybody. Fast forward through that if you're going back and watching this. Started on the wrong browser, but yep. So that's the game plan for today. Transition levels a little bit wider, 6,400 key level to the upside to get above if you're a bull. And then if you're a bear, I'd be watching 63.75, 63.50 for possible downside. And then within the overall transition, drunken sailor range can be very choppy for today. So make sure you're managing risk appropriately. Come join us at GameEdge.us. Check our website out. Come join us in the Discord. We'd love to have everybody. We appreciate all the interaction on X as well as YouTube. Keep sending us posts back and forth. We'll try to answer your questions as soon as we can. Again, follow us on X, like and subscribe, retweet for us. Follow us on YouTube, hit that like and subscribe button. You'll be notified when we go live midday, which we've tried to do every day this week. So make sure you check out those midday reviews. Everybody make it a great Friday. Have a lovely weekend. Thanks for joining us, and we'll see you later.